This is your baby. This is your summit. I think 17 years running now. What are the clients this year, this time around, telling you most?
Well, thank you, Steve. Great pleasure to have you here at our Global China Summit. So indeed, it is our 17th year. And this year in particular, there are so many interesting topics for investors and corporates to discuss. Let's think about from an investor perspective. You know, we are in the year of the ox, but the year of the ox really hasn't turned into the year of the bull. The reason why I say this is because since the start of the Chinese New Year, China stocks have actually have had a correction. You know, a lot of the technology names, consumer names have dropped by anywhere between 20 to 30%. So now investors are thinking, gee, after this correction, should we step up and purchase more names given the valuations are much more reasonable? From the corporate standpoint, many of the innovative companies in China are seeking to raise additional capital to fuel their future growth. So they want to share their stories with global investors. They want to talk about their future expansion plans. And of course, there are lots of macro issues at play as well. Everyone is thinking about inflation. People are thinking about longer range thematics such as demographics in China. So it's a whole host of issues investors and corporates are discussing at our China Summit this year.
Well, it's understandable why some of the tech platforms and the tech companies have been under pressure. There's been regulatory issues. We don't need to go necessarily deep into that. Beijing has pretty much laid out what they want these platform companies to do. You say that there are better valuations right now. Do you think simply because of their girth and their size and their reach and their user base that the Tencents and the Alibabas and the Meituans and the Pinduoduos, these companies look cheap because they have such big reach? Forget the regulatory overhang.
Well, you know, these companies have emerged as the winners in the post-COVID era because the way of life has changed after the pandemic. People are really embracing the digital way of life, whether it's online shopping, whether it's gaming, et cetera, et cetera. So all these companies are really taking advantage of the new way of life post-pandemic. In addition, you know, they're growing very rapidly, which is, of course, attracting very big investor dollars into these companies, for sure. And valuation, compared to last year, they have become indeed more attractive. So investors are evaluating which name should they buy, which sector should they focus on. So that's what we're here about, you know, linking corporates and investors, providing a forum for them to share and discuss and really debate the issues of the day.
What are the biggest challenges then? We talked about the regulatory threat overhang in some industries, but then there's also been a wave of bond defaults. How does that change, or does it change your assumptions about the implicit guarantees that everybody assumes are there, that the state will come back and back up, have a backstop to these state-owned enterprises? And I bring up the case of Huarong, and there are other cautionary tales.
Well, for sure, there are rising financial risks, not just in China, but globally, because in the wake of the pandemic, so much money has been printed. Some people have thrown caution to the winds. However, you know, in China, we all know the country and the corporate sector have a pretty high leverage ratio, you know, among the state-owned enterprises, private sector companies. So when leverage ratios are very high, when, you know, particular companies run into growth issues, then they may have an issue to repay their bondholders. So in recent months, we have seen indeed a rise in bond defaults. This is not necessarily a bad thing because it's actually going to teach a lesson to the companies and investors. You know, you have to really be very careful doing your diligence before you buy into anything.
What other levers are still in the toolbox for the PBOC and other authorities to tame the rise of the yuan? Because that's been a big concern.
Well, you know, the yuan's appreciation against the dollar has been quite remarkable. It's appreciated some 13% against the dollar since this time last year. So in a way, it's good to help China contain some imported inflation because commodity prices worldwide are increasing. But on the other side, it could render the country less competitive in terms of rising labor cost. But I think the PBOC wants to keep the currency relatively stable, so they raised the reserve requirement ratio for foreign deposits the other day from 5 to 7%. But also, I think one of the reasons why the yuan has appreciated is because of the very simple reason of interest rate differential. U.S. rates are very low, at near zero, and China rates the 10-year Treasury yields in China much higher compared to the U.S. And China has been a magnet of capital. Portfolio inflow, equity, bonds really have contributed to the rise of the Chinese currency.
I hate to pivot so quickly, but on demographics, how should the global investor really look at these moves? Because it's pretty much of an about-face on policy over the last 10 years with the new census coming out and showing working age populations in China have shrunk, old age has grown quite considerably, and birth rates have dropped off sharply. They've just extended the ability to have a third child, which a lot of people say families are not going to take them up because it's too expensive to have a second, let alone a third. How should they be looking at these demographic changes in China where the working age population is dropping off significantly? That's
indeed the case. You know, China is trying to prevent the demographic dividends to becoming demographic drags, right, on the economy for the past many years. Because of the younger, large working population, the economy boomed, especially in the manufacturing sector. But in the recent, I would say 10 years, you're seeing this very dramatic trend of the aging of the population. And this has a host of implications. Number one, wages will have to go up because the working population is shrinking. Number two, social welfare provision for the elderly needs to be stepped up because people are retiring. If they don't have the social provisions, that would become an issue in terms of the social stability. In addition, you have education of the young. So last year, in 2020, China had only 12 million babies. That was the lowest ever, despite the loosening of the one-child policy. Now we have a three-child policy, but because of the cost, because of the rising education, rising affluent levels, young couples may not consider to take up that option.